GM, good morning. Welcome to the Milk Road Show, the daily crypto show for people who read charts like other people read horoscopes. I'm your host, Jay Hamilton. It's Wednesday, August the 27th. Now, most Bitcoin investors are sitting on their stack, waiting for number to go up. And that's not a bad thing, but there's a big opportunity that a lot of the market is missing, which is using Bitcoin as pristine collateral to generate yield and fund real life purchases without selling your satoshis. That's what everybody wants to do, and today's guest is fully committed to helping you do that. We're joined by Matt Luongo, founder of Thesis and the CEO of Mezo. He has also founded multiple, the number of Bitcoin products that this guy has founded. We'll talk about them all. Fold, TBTC, Keep, the list goes on. He's been building in Bitcoin since 2014. And now his goal is to unlock the $1 trillion of idle Bitcoin wealth that you and many others are holding and sitting, and you want to get yield on it. Well, we're going to talk all about how you can do that today. Before we jump in, I'm so haven't about this, and you guys haven't been listening. If you've been listening every day, I'm sorry, you've heard me say this before, but the team has been cooking, and we just launched the new Milk Road website, milkroad.com. It has a fresh look, new fresh milk. Check it out if you haven't seen it already. I'm so fired up for it because it's going to make sure that you have everything you need to succeed in the coming bull run. And to celebrate, you can get 25% off the Pro All Access and Crypto Pro, 25% off until midnight tonight. So don't wait. Go right now. Hit the link in the show notes, sign up, and join Pro to make sure that you succeed and get it's the incredible product, everything you need. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just returns. It's also brought to you by KGeN, the verified distribution protocol, changing the growth game. With that, Matt, welcome to the Milk Road Show.
Thanks for having me, Jay.
Pleasure to have you, my man. I love that we're starting off with some laughs. Okay. You've been in Bitcoin since 2014. You were around quite early. What's the biggest change you've seen in the way people want to use their Bitcoin?
Yeah. The reason I got into Bitcoin was because I got deplatformed by PayPal at the time. And I'd started a new little side hustle that did unexpectedly well. And then PayPal decided that it was great finance and shut it down. And so, when I found Bitcoin, which was like into 2013 when I first started playing, things were happening with Gox, everything. It was an interesting time. But when I found it, I wasn't really looking for crypto anything. We didn't really say that in 2014. I was just looking for a PayPal alternative. And so I ended up relaunching this product with Bitcoin, and no one was able to deplatform me. I did $50,000 in the first 2 days. And this is out of my tiny little condo, and so I kind of had this lesson of oh shoot, that's what Bitcoin is. So a lot of people wanted it to be about payments. Some people wanted to use it to save, and there's plenty of speculation. But that was kind of the story. And actually that product that I launched ended up eventually turning into Fold. And the Fold people know today, it's about earning, because that's what people want to do. They want to earn Bitcoin. But back then, it was actually about spending. It was about spend your Bitcoin at Starbucks and Target and buy Domino's. That was kind of the whole, make your currency useful.
Sounds crazy now to think about buying pizza with Bitcoin.
Right. And it's now we are oh, I heard somebody did that once and it didn't go well. So I think now we all know no one wants to be the next Bitcoin pizza guy. And so I actually looked back the day I was curious about how much Bitcoin had effectively helped people sell. In today's dollars, it's about $500 million. So I'm sorry. Yeah.
So you helped people sell $500 million worth of Bitcoin in what, 2015?
Yeah, this is 2014, 2015. Yeah. And so, yeah. Yeah. So,
but that's today. It wasn't $500 million then. What was it?
No. It was much smaller than it was a teeny startup then. Yeah. But it's just those right. And so what feels like a small, what feels like something inconsequential yesterday, today becomes something big. I mean, that's kind of Bitcoin's whole thing. And I think what's interesting, you look at the market today and people say the crypto market. And at the time, it wasn't the crypto market. It was Bitcoin. And then there were a few, Dogecoin existed barely. But a difference today is like, I think people think that Bitcoin is like the old person's coin. I think it's like the old reliable, and then it's like, okay, no, I want to pump something on Solana, and that's where I'm gonna. And I think, you know, what we've really gone from is we've gone from Bitcoin as payments to Bitcoin as speculative investment, and now we're starting to get close to. I mean, do whatever you want on Solana. Bitcoin is your retirement account. Bitcoin is your savings. So after you make your money, you take it back to BTC. But yeah, it's a pretty huge shift since 2014.
Yeah, no, it's and what a ride it's been. It's funny. People forget that when Coinbase first launched, it was a Bitcoin exchange. Like people forget that, you know. It's we did an episode with Dan Romero, founder of Farcaster, and like number 10 at Coinbase, and we were chatting about like the early days of Coinbase and how it was all just Bitcoin price basically, and like they just sat there and watched the Bitcoin price, and that was how the early days went. Obviously, a lot has changed since then. Give us your quick. You know, our listeners are investors trying to understand what's going on in the markets. We're going to talk about a lot of different things today, but I always got to ask our guests, give us what's your quick market take? You know, what are you seeing right now from your seat on the ground?
Okay, so we've got this set up where we've had like, what are we, like triple top or something with BTC now. We've had ETH return. We've had all sorts of like things that are rhyming with past cycles. It's very tiring to me as a participant, all this like digital asset treasury company stuff. We're seeing MNAV start to get really tight, but we also see maybe a liquidity valve opening later this year. So I guess how I feel is pretty bullish. That said, past version of myself thought like 124 was my BTC like market top. And so, you know, if you want to believe pre-bull market, Matt, this is a great time to sell. I still feel good though. I think over the next 6 months we've got a lot of growth.
Yeah, that very much that aligns with the general take,
which scares me. If I'm consensus, maybe I'm wrong.
Yeah. I think the big reason why it's consensus is it's less on the crypto side, it's on the macro side. That's why it's consensus, right? You cannot deny the inevitable printing that the US is going to do, along with every other economy. And rates are coming down. Switzerland just lowered their rates to 0%. Switzerland has 0% rates right now. 0%.
That's crazy.
Like, so that's, no, isn't that wild? I wish I lived in Switzerland and could buy a house there right now, because this is the
whole difference. This is like the like crypto swing trader versus this is what Bitcoin was designed for. You know, so it's all that's kind of, for me, it's like, well, of course governments are printing money. Obviously, if you're a trader, the timing matters a lot. But that's why I got into this space. First it was I'm getting deplatformed, but very quickly it became, wait a second, when governments print more, the money's going to go where?
Yeah.
You know? Yeah. So it's self-fulfilling, but here's where we are.
And everyone is waking up to that. One take I heard recently that I really liked because I hear what you're saying. There is this, it's, as an investor, it's very natural to start to have doubt, and it's easy. I think we're in the 150 to 250 range. Somewhere in there is where we're going to land in this cycle.
I'd love to see us break 200. That'd be amazing.
Yeah, that'd be epic, right? It would just be such a big milestone. But I think that what you're seeing is you are seeing a lot of the world is catching up and learning that fiat is fucked.
Yeah.
And what do they do? Well, it's not just Bitcoin. Like, I'm not saying not like the whole world is just going by.
No,
Bitcoin,
other assets obviously are going to exactly. Yeah. So it's a liquidity play. Yep.
Yeah, you can see that. Okay, let's talk about. You talked a little bit about in the beginning, Bitcoin was all about payments and spending, right? Yeah. And then now we're in this period of it's about saving and hodling and holding, right? Yep. Where you think we're going, and I agree with you, is we're going to this phase of borrowing. That's the next step that we're going into.
Yeah. Talk
to us about this where we are in the life of Bitcoin and where you think we're going.
Yeah, so there's some of this is Bitcoin specific, and some of this is if you reframe, I don't usually talk about crypto as a whole because I think the most interesting thing, as an engineer, it's hard to hear, but the most interesting thing to me remains Bitcoin. But when I look at crypto as a whole, if you reframe DeFi as open finance, you're like, okay, well, we're taking things that used to be esoteric financially, and now we're making them easy for everyone. So you think of things that used to be esoteric. Well, Elon Musk's lifestyle is funded by a loan against his Tesla. And that seems like, for some people, that's like, well, why would you do that? And that's a whole big, strange discussion. And the answer is, well, a couple things. One, he thinks it's going to go up. Another, he doesn't want to take the cap gains hit of selling. There's a whole slew of reasons why he would do that. But this idea of never selling, but borrowing against your assets, it's kind of been reserved for the rich. And, I think something that we're doing in Bitcoin and that DeFi is kind of prototyped is this opportunity to take this thing that used to just be for the rich, borrow against your assets. And now it's like, well, no, anyone should be able to borrow against their assets, and they should get a good rate, and they should be able to live their lives. And so I think we've hit this point where, selling your Bitcoin is, maybe it's a good idea, maybe it's a bad idea for you personally, depending on all sorts of different factors. But for the most part, it's probably something you want to hold on to a long time. That doesn't mean you shouldn't be able to get a house, pay for food. You should still be able to live your life. And so that's why I think this next move is really toward using Bitcoin as the world's hardest money and using it as collateral. And to give you a bit of a dog food kind of like story about how I started doing this, I tried actually to finance. I have 2 children, and a house matters to me, right? And having a good place to live matters to me. And so I tried way back in 2018 to finance our first home with Bitcoin. And I said, hey, can Bitcoin be part of my creditworthiness?
How'd the bank feel about that?
Yeah, they didn't love it, but actually it went a little differently than I thought. I thought they would just tell me no, but actually they're like, oh, we have this other lender who you should talk to. And I was like, oh. So I went to talk to the other lender, and it was a little weird and furtive. And I actually went physically into this office, and they were like, hey, we love Bitcoin, sell it, come back in 31 days. We will not ask you where the money came from. And I'm like, yo, I'm not telling you I'm a criminal. I just want to, it's mine. I've been holding it for years. Yeah. So then I tried it again. I tried it again in 2020. This actually led to the launch of TBTC. I wanted a DeFi way to borrow against my Bitcoin. I didn't want to go into someone's dark office or be weird. I didn't quite pull it off because we didn't have the liquidity. So finally last year, I actually took a decentralized loan against my Bitcoin, and I used that, and I put half the house down against a Bitcoin loan. And so now it's okay, well, what's the next step? And the next step is, well, interest rates need to be really good. It needs to be really easy. It should be something anyone can do. And that's what we're working on with Mezo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. The best audience to distribute your product to? Your superfans, duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Yeah, okay, let's use that as a jump into Mezo, because
sure.
For those who haven't heard of Mezo, this is, a super cool product and definitely the future for a lot of people. It's funny you bring up the house story. I've had that conversation with so many people. When you're in crypto, there's so many people that, okay, what's the biggest asset you want to buy? It's a house. You have so much of your wealth in crypto, and the bank's like, I'm not I don't matter. They're like, I don't recognize
and
that.
like, you know, executive
like,
orders don't fix it. None of this stuff is just gonna fix it. But it's starting to get interesting, right? Because like now, I had with this Fannie Mae news recently, I had lenders and real estate agents that I know call me, be like, "Hey, can you help us unpack that?" And I'm like, "Well, can't you ask Fannie Mae?" And they're like, "No, they have no idea what's going on. Can you explain?" And I'm like, "Sure." Right. And they're like, "How did you finance your house? What does this mean for us?" And I'm having to explain things to them like, you know, well, yeah, what is good collateral? Well, is Bitcoin the only good collateral? Are there other things? And I'm like, oh, you should probably be careful with the other things. They're a lot more volatile. So yeah, it's been interesting. But you know, on the one hand, we have TradFi that's more interested in embracing pull our bags, but also like actually doing things the way that a lot of us in the space have for years. On the other hand, it's like, well, you still shouldn't have to call someone. You know, you still shouldn't have to fill out paperwork. You still really, if you have Bitcoin, you really shouldn't have a credit check. You should just be able to say, well, cool, I got a loan against my Bitcoin and here's how I'm going to pay. And so, yeah, that's kind of how I see it. I mean, eventually, I think the world works that way with every asset we own. I think everything, you should be able to very quickly open up a credit line against it.
Yeah. Because of blockchain, right? Like blockchain.
Yeah, exactly.
It's going to
on chain and you have the assets. So it's like, you should honestly, you should be treated like royalty by these lenders because in a lot of ways you have something that no one else is going to be able to give them.
Yeah, it's true. Give us some stats on Mezo. What have the results been so far?
It's early. Oh, we just really started originating loans. So we've got like $4.5 million in loans originated so far. People are excited about the rates. So like my big learning from doing this myself is I need fixed rates. And DeFi doesn't really do that, right? So in DeFi, typically everything's going up and down. And it takes you a while to realize you're competing with traders. You're trying to buy a home. Everyone else is trying to get leverage. And so their rates are swinging and they don't care as long as they get the position they want. But if you're putting money down for like 30 years, you care a lot. So yeah, so what we've started with is 1% fixed rates, and yeah, it's early. I'm actually getting ready to refinance my house now.
It's 1%. How is it?
It's 1% introductory. Yeah. So here's the beauty of this. We take Bitcoin, and the way that we can go into the details of the way that moves if anyone's really interested in that side. But basically, you deposit Bitcoin on Mezo, and when you take out a loan, it's creating new money. So it's printing MUSD, which is a Bitcoin-backed stablecoin. And so that means we can give fixed rates. We can give this introductory offer, which we will be ending soon because that is low.
That is insane.
But it's insane. Yeah. So
is this only available in the US? Just for our listeners?
No. This is international. No, you are good to go. Yeah. So the system's still early, and we're still getting things smoothed out. But we've got enough liquidity now. I'm getting ready to refinance my home, and it's like a nice upper middle class spot. Like it's a proper house, and so yeah, we should be about ready for people to start doing that in mass. And then the next step for us is really to start working with, and this is the weird thing, banks. It's for us to start working with these lenders and these originators who used to laugh at us and who are now like, okay, I got to catch up. So we're trying to work with these partners and help them actually originate for people who otherwise would maybe be paying an interest rate that's a little crazy on a traditional mortgage.
Yeah. Okay. Let's I want to step back for a second to Bitcoin yield as a category. Yeah. Can you give us a overview of the current options for Bitcoin yield and how to think about it? Because I know that everybody listening to this is holding Bitcoin and wants to get yield on it and wants it in a safe way and all of that. I don't know that everybody's trying to buy a house at this current moment, but if you are, go check out Mezo. So we'll put a link in the show notes.
If you want to finance your life, I think Mezo's got what you want right now. So what we're working on, let me maybe first tell you about the whole market. The first thing you have to understand about Bitcoin yield is that in some sense it doesn't exist. So if you're coming from like Ethereum or Solana, you're used to, well, there's some risk-free rate that this asset gets in yield. Well, that's not the case in Bitcoin. The whole point of Bitcoin is that that's not the case, right? So there is yield in Bitcoin, but it works a little bit differently. And the yield that's been around way longer than I've been in the space has been lending. So you have people who want to borrow and either short or they have some other reason that they want to borrow Bitcoin. And then you have people who are lending who are looking for a return. So that's where true yield in Bitcoin comes from. Now, we've had projects more recently that have launched that have tried to offer yield in other ways. So they've said like, okay, well, this Bitcoin is going to power a proof of stake network that's going to, and then there's just sort of some like ... And then at the end, it's like profit, right? So if someone can't convince you of where the yield is coming from, I just want to be clear, there's a good chance you're the yield, and you need to be really careful. Because again, it is not like Ethereum, it is not like Solana with Bitcoin. Your yield is going to have some sort of risk. It's not going to be free. So that's the first thing I want to make sure people understand. After that, ways to get yield on Bitcoin. Most of them are financial, right? So you can lend it, and you can charge interest. You can put Bitcoin in like an AMM pool or in some sort of like actively or passively managed position where it can yield fees. You can do, there are like saddle strategies and option strategies you can follow that start to get a little bit more esoteric. But yeah, so that's the core idea and how you.
Look, before you keep going, I don't mean to cut you off.
Sure.
How much of Bitcoin is doing that right now?
Not very much. So let's see. We have, I believe, 330,000 BTC that is currently in use across DeFi. So most of it is, I'd say maybe, frankly, almost all of it is chasing yield. Like earlier, you heard me talking about accessing your equity and buying a home. Well, you can also use those dollars to leverage. You can use those dollars to do all sorts of other things. So almost every wrapped Bitcoin that's deployed in DeFi is chasing yield right now.
And what's that? I'm just trying to do the math. What's that in dollars?
Oh yeah,
that's
330,000 times. Let's be charitable and say $120,000.
36 billion, roughly.
Yeah.
30, yeah. Around 30 billion, 35 billion. Okay. And what is the, let's go back to the original question about Bitcoin yield.
Sure.
If you're somebody listening to this episode, what's your recommendation to them? How would you approach Bitcoin?
Yeah. So I think that we are very much still in a do your own research phase. So we're getting ready ourselves to, we've launched an initial yield project called Acre that's getting ready to sort of like crank it up. Mezo has its own built-in yield that'll be dropping soon. But I just think the most important thing, guys, if you're interested in yield, is just to understand where the yield can come from. And if someone will not get up like this on a screen and tell you where it comes from, it's probably too good to be true. Other things, I mean, there are people who, let's see, Maple's doing some pretty cool things. Ledin is doing some cool things with Bitcoin lending. Lava is interesting. But what's important about all those is you can see on chain how the yield's being made. It's not just sort of a vague promise. So I would say all of those are interesting. And then actually we have a pretty rich yield opportunity right now. I think we have maybe $17 million in TVL on Mezo of people who are helping bootstrap the system and putting in BTC. But it's important to understand that first tranche of yield is happening. It's being subsidized. It's not magic, So yeah, I would say we're still in the do your own research stage. It's not like you need to read Solidity or confirm contract addresses bad. It's not that hard, but it's still, you should do some research.
Is that why Bitcoin DeFi has not taken off? Because
I think that's a big part of it.
Yeah. Why hasn't Bitcoin DeFi taken off? So, everybody loves to talk about BTC Fi and, the narrative it's been this wishy-washy narrative that has never really established itself.
Yeah. So I think we've got a few pieces here, right? So we've got, on the one hand, it's just a little hard to use. So like I'm used to having Bitcoin self-custody and like I pull out a hardware wallet here, I have different setups and I can go out and use it. But most of the software that does this stuff in a decentralized way has been built for Ethereum or Solana. It doesn't work with Bitcoin wallets. And then I found that actually a lot of holders don't know with Bitcoin what to do, especially this latest crop. A lot of them are coming through MicroStrategy. They're coming through the ETFs, right? So they really don't have an easy path to get on chain. And then of course it's cultural. A whole bunch of Bitcoin. If you still have Bitcoin now and you got in a while back, it's incredible that you still have it, right? have been so many hacks. There have been so many issues over the years. And so I think that the people who still hold BTC are rightfully conservative. They look at Bitcoin as a savings asset, and they want to do things that are safe with it. So I think you've got a few different reasons here, and that makes our job, frankly, way harder, right? It's much easier to get somebody to splash money from one of these other chains or from some other crypto project. It's much more difficult to take someone who's on Coinbase or Kraken who's never withdrawn their BTC. And you kind of have to hold their hand and explain to them, like, here's how you do it safely, and here's how you set up your wallet. So yeah, I think there's a lot of reasons, but on the flip side, the market is much, much, much bigger, right? Just like, I mean, like, I don't know, we don't only need to look at the Bitcoin dominance charts all day or anything. It's just, you can get so many more holders engaged and interested in these products. It just requires a lot more upfront education.
Mm-hmm, mm-hmm. So what's the future going to look like? Hal Finney used to talk about Bitcoin-backed banks. Yeah. Is that going to play out?
I mean, let's look at the
explain that for those who don't know the background.
Sure.
There, and talk to us. Yeah.
So look, Hal Finney was an early Bitcoin developer, quite iconic. There's a running Bitcoin tweet that is a fan favorite. And so he was an early Satoshi correspondent, an early developer. And he had this idea in 2010, and it's only now coming to fruition. And the idea is this idea of a Bitcoin-backed bank. But before I talk more about Hal Finney, look at this cycle. What's happening right now is Bitcoin, stablecoins. Now, a lot of the reason a lot of people got excited about Bitcoin in the first place was to step away from the state, was to step away from fiat, is to step away from inflation. But the thing people want to use is a stablecoin. So they want to hold Bitcoin, but they want to use a stablecoin. And so obviously, you have USDC, you have USDT, you have all these folks who are holding treasuries, but it's just a fiat instrument at the end of the day. So Hal Finney's idea of a Bitcoin bank is, well, what if a bank is holding Bitcoin and they're issuing their own currency on top of that? So hopefully you guys hear this rhymes with what we're doing with MUSD. I think that the way to win, the way to create the Bitcoin circular economy that we wanted back in 2014 and back in 2015 is not by asking people to spend their Bitcoin, because that is crazy. You shouldn't spend your Bitcoin, guys. If you trade, you can trade, but like if it's your hodl stack, you should hold it. But I think a really great way to move adoption forward is to make it easy for people to borrow stables against their Bitcoin. That's our circular economy, but it's backed by something stronger. It's not just backed by treasuries. It's actually backed by Bitcoin. It's backed by something neutral. So we're trying to realize this through Mezo, and I expect other people are going to too, when they realize that, hey, you can actually have a stable coin that is pegged to the US dollar, that's safe, but that can't be seized, but that that isn't part of kind of the US rails. So that's what I'm excited about. On the one hand, for Bitcoin holders, it looks like cheap loans. But then on the other hand, globally, it looks like a way for Bitcoin to actually power all these stablecoins.
Mm-hmm. Mm-hmm. With you building so many different products focused on Bitcoin, you're obviously thinking a lot about adoption of Bitcoin and where we are and where we're going. Talk to us a bit about where we are in the adoption cycle and where we're going next, what catalysts you see, what you think is going to be some of the large on-ramps for more people to come in.
Yeah, let's see where we are. I guess it's worth saying that a lot of crypto hurts Bitcoin with adoption. So it takes right. It takes a lot for someone to understand what Bitcoin is. It takes a lot more for someone to understand all the details of crypto. And if you show your buddy like CoinMarketCap or CoinGecko and they're new to it, or heck, your mom or someone in your family, it's really easy to explain the first one. Then it starts getting really difficult. Like, do this exercise. Just try to tell someone. Read down the list, and it's like, so they're like, oh no, that's a scam. But it's top 10. But it's hard. It's complicated, right? It's like, and so I think this is the first cycle that I've seen where people that I don't know are starting to distinguish between Bitcoin and the rest of the space, because like the NFT cycle got us a lot of hate, right? And a bunch of people just had USD, and then they bought NFT, and then they learned about Ethereum, right? And then meme coins just slaughtered retail. And I think that's part of why this cycle is so strange, is that retail showed up and they were like, yeah, I'm excited, I'm going to buy. And then they just got completely wrecked by Trump and Melania and Argentina and everything else. So I think that we're finally starting to see people distinguish between the two, which I think is cool. We're seeing a lot of the complaints go away. You notice you don't hear about Bitcoin burning the world down anymore now that everyone's using chatbots, right?
Right.
So we're at this really good spot, but I don't think we've crossed the chasm as making things simple. So like maybe people have bought it, but they still think of Bitcoin just as an asset that they have like a number on in their portfolio somewhere. And I think we want to move to, well, yeah, that, but also something you can store offline. It's something that you can treat and really like, use as kind of your asset of last resort. And then it's even harder to get them to actually use it. So I think we're getting closer. I think we're starting to see the chaff and the wheat and the scams and kind of stuff people can trust start to get separated in the public's mind. And I'm thrilled by that. But yeah, we've still got a long way to go.
What do you think are the big, we talked earlier in the episode about price and where, I was saying that I think Bitcoin could go to, 150 to 250. Yeah. Your prediction was 124, which we've already got there at the cycle. Yeah. So might have peaked, exactly. But you don't think we've peaked yet.
I think we have another run. Yeah, I'll be happy either way. But yeah,
what are the coming catalysts? What can push us?
I see a few things. There's a lot of stuff that I feel like. Okay, so anytime someone says the market should do something, it's like, well, it didn't. So, but there are things I feel like should have pushed us higher already. When I look at just like kind of how completely the U.S. government and the regulatory regime is embracing Bitcoin right now, and so I feel like there's a lot of slower institutional and TradFi timed things that are happening. We're going to see retirement accounts that can start holding Bitcoin without you doing some self-directed hack, but actually like properly. So it's going to take time. It's going to take time for people's 401ks and IRA providers and everything else to flip on, hey, here's the buy Bitcoin button. But I think we're going to see more and more. And I think honestly, the bigger we get, the less and less this is going to be driven by news. And the more and more it's going to be driven by macro conditions. So we're going to be super sensitive to rate changes, obviously, but we're also going to be sensitive to other asset classes, because it's like we're not just challenging gold. Eventually, you're challenging real estate. You're challenging things that people really think are their kind of like forever holdings. So so it'll be way less fun on the Bitcoin side over time, because it'll be less and less about this cool new thing happened and you can no longer point to why the price moved. But I think it's going to be more of a steady grind and a little bit more macro.
Mm-hmm. Yeah, the retirement plan comment that you brought up, like that is, people don't, it's That's
so much money.
There's always a separation between news and flows, right?
Yeah.
And so we got the announcement that you can now put Bitcoin crypto in your 401k, and which is retirement plans in the US. And but that doesn't mean that like the next day, all of a sudden people are putting Bitcoin or crypto in the 401k.
I mean, front run that now, guys. That's alpha, right? It's
that's exactly. Coming in 2026 is my guess on when that comes. And 401ks have $9 trillion in them. Yeah. So just think about that. If we get just a few percent of that to flow into crypto, that is a massive catalyst that is coming next year. And I think that's where we get into this, like, and I don't know if you have thoughts, this extended cycle conversation of, is I'm not a super cycle believer. I believe that we will continue to have cycles. We've had cycles in markets well before we had crypto. We are going to continue to have cycles. So I'm not saying super cycle, but there is a really good case to be made that this cycle is the first time we have a 5-year cycle, and that goes into 2026. And a lot of that is because a lot of the catalysts so far are changes that have not been felt in the markets and in flows and have not impacted demand yet.
I mean, look, I'm a permeable, and so like, well, I don't want to say super cycle. It's like, well, we're still going up and to the right, like every
For
cycle.
everyone listening to the podcast, Matt just did an excellent chart drawing on the screen.
It's like
of a up and to the right bar.
I mean, next time, we test 100K. Oh no, Bitcoin might be below 100K, and I'm like, man, I remember when I was worried about 1,000, and that was the thing we were all talking about. Did it touch it, and did it go below? And so I think if you're patient, and if you're actually an investor, not a trader, but you're an investor, there is like no better time to buy than today, and the next day, and the next day, and the next day, and that's really how I feel about Bitcoin. As far as breaking out of the cycle, it makes sense to me that the supply shock, quote unquote, right, of halvings in Bitcoin, it should matter less and less over time.
Yeah.
Right. So that part makes sense to me. And so I could totally see the 4-year that I've been living by for like over a decade now. I could see that becoming damper. But then it's like, okay, well, where could there be really big supply changes? Well, if some Bitcoin treasury company doesn't have diamond hands, so there are big risks, and there are things that I think could break out. But I mean, long term, I feel great.
Yeah.
So
yeah. 100%. We're gonna have some digital asset treasury companies blow.
Oh yeah,
up.
we're gonna see some. Yeah, and
we're gonna see.
Yeah,
that is. It is inevitable that is going to happen.
And I don't think
that's soon. I think that's like we got some time for that.
Yeah, I think we got time, but I don't think I've heard people compare it to Luna. And for those of you who aren't familiar, Terra Luna was one of the three horsemen of the apocalypse last cycle, and it was effectively a complex, not that complex, but it was like a levered Ponzi scheme, right? And then we saw when it went down, what was important about it is when it went down, it went faster and faster and faster, right? And then when you look at Bitcoin treasury companies, I've heard people try to compare them, and I don't see it. I mean, MNAV. So this idea, if you're into these treasury companies, of like getting a multiplier on your holdings, I completely see why that would go to zero. And I could also see some of these, if the market tanks and we have like a 20 or 30% day, someone being like, actually, we're not a Bitcoin company anymore, and they sell. I can imagine that, but I don't see like the systemic risk that Luna brought. Like I don't quite understand that. So either I'm super left curve, or what I've actually found is a lot of crypto influencers don't hold that much Bitcoin. I get it. It's true. Nice to chase shiny things. You should rotate back into pop Bitcoin once you've made your winnings. So
yeah. I mean, keep it simple. Like just like unless you want to be in this every day and you want to make this your job, and you want the stress of the insane volatility that comes with trading, just I don't, somewhere between like up to 80% of your portfolio should be Bitcoin, right? Like basically, I would say you're in the range of 50 to 80%. Now, don't get me wrong. I'm the first to say that I do think in this cycle from here, I think Ethereum outperforms, and I think Solana outperforms. Like I do think we are going to see altcoins.
Listen, ETH was a cursed asset. It needs its day.
It needs its day, right? Like that's going to happen. But I can't deny that like the biggest, if you're going to hold ETH, you better have an exit strategy, because I can tell you ETH's going to dip a lot lower in the next bear market than Bitcoin is. That's for sure. I can guarantee that.
And the way I like to explain it to people is like, because usually they're like, hey, I'm really interested in this stuff, and you tell them to buy Bitcoin, and then they wind up and they like get like XRP pilled, or they get like, they go some path, they're like, how did you get there, right? Yeah. And so what I try to tell people is like, look, any of these things could make you money. There's only one of them where if you go into a coma for 10 years and you wake up, you're sure that it'll not just be there, but it'll be worth a lot more. And I think that that's just a very different kind of asset. So, if you just want to like get the quickest win possible with like a 90% chance of failure, you sort of play the game. And be okay. Don't cry in the casino, etc. But if you're looking for like, I want to pass on something to my children, it's Bitcoin.
Yeah. Completely agree. Matt, absolute pleasure to get you on the show today. Thanks so much
for having me, Jay.
Thanks for listening in, everybody. I got to remind you, as always, none of today's episode is financial advice. I'm not your financial advisor. Matt is not your financial advisor. If you are going to invest any of your money, you should do so carefully and with your own research, because investing is risky and it is difficult, as we talked about in today's show. And right now, before midnight, If you're still listening to this, go to milkroad.com and hook yourself up with 25% off Milk Road Pro, All Access, Crypto Pro, Macro Pro, Degen Pro. They're all on sale today till midnight. Go check it out. Thanks for tuning in, everybody. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.